Hello, everybody. Steve Griffiths here, developer of the MT Predictor software program. If you could all let me know whether you can hear me okay and can see the chart with the risk disclaimer, that would be great. So just slide your mouse over to the left-hand side. You'll see a Q&A box. If you just type okay or something in there, just let me know that, excuse me, that you can hear me okay. That would be absolutely great. And while you do that, I'll just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and will and do unfold. It doesn't matter what trading approach, excuse me, there always will be losing trades. We'll look at an example of that in today's webinar. I just close that off. Right, so you can click on the Q&A box again, and then that will take that away. Right, thank you for a few of you writing in with some good examples of some good trades coming in for you in the last few days. That's really nice to see, so well done for you guys. Some of those I want to look at today, but I want to start by looking at the USE minis, and I want to go over what our VS or volume spike trade setup is. We had a look at our W3 or wave 3 trade setup a little while ago, so I want to have a look at our VS or our VS volume spike setup. These are the two favorite trade setups of mine out of all the MT Predictor trade setups. So I just want to show you why. We'll also have a look at some Forex markets, and I've been asked to have a look at crude oil a bit later in the webinar as well. Do excuse me, just got a bit of a tickle in the back of my throat there. Right, so the VS setup. What is the VS setup in MT Predictor? Right, I'll just use our standalone version here to demonstrate this. The VS trade setup is in our NinjaTrader add-ons and also our TradingView scripts. If I bring in our TradingView scripts, can you see there? There's our VS setup. It's also a DP one as well, but there's our VS setup there as well in our TradingView scripts, as well as our other markets here. So this is a 3-minute chart of the NQ. So what I want to do is I just want to use our training mode, and I want to go back a little bit here. So what are we actually looking at? What we're looking at is we want to see when the market makes a significant pivot like this. So I'm just going to draw a line across here. And you can see the market had a couple of attempts at poking up above this high here, but it didn't do anything. It just basically came back again. So what are we actually looking for? Well, our MTP trend is grey, so it shows we're in the process of making a reversal. But if I go to our VS or volume spike, what I'm looking for is if I go forward a bar, first and foremost, I'm looking for this. First and foremost, I'm looking for a significant move through a previous high or low. Okay, so there's the previous high. I'm looking for a significant move like this to go through a previous high or low, and we're looking for important highs or lows. In other words, ones that could signify the end of a trend termination. We're not looking for ones that just come across minor highs and lows. Can you see it down in the bottom here? We have a high volume bar that's actually signaled as red. So what's happened is the market's made a big move, it's gone through an important significant high, the volume's increased. Most amateur traders would now look at this and say, well, that looks like it's buying, doesn't it? Because we've moved beyond a significant high, the volume's increased, it looks like it's buying, therefore the market looks like it's going to go higher. However, what we do is we look at the next bar. Okay, so if I go forward one more bar, what we're looking for is what happens to the bar afterwards. Why is this important? This is important because if the volume on the previous bar here was actually indeed buying, the high volume buying, then the market would have carried on higher, wouldn't it? It would have carried on going up. So if this was indeed buying volume, the market would carry on going up. But what happened? The market didn't. It failed to carry on going up. In other words, it made a reversal. So what does that mean for the volume that was in the previous bar? Well, it actually meant that the volume on this previous bar was not actually buying, as most amateurs think. It's actually selling. It's the professionals coming in and getting short, in this particular case, off the amateurs who are buying, with the idea being that they're now going to move the market in the opposite direction. So do we just look for a failure here? Well, no, we look for the failure to unfold at a certain level. The level is our DP of the previous high. So if I right mouse click here, do DP, can you see how the reversal actually unfolded at our DP level? This is why our DPs are so important, because they do give you in advance areas where the markets are likely to make reversals. So we have a significant advantage over most of the other traders out there, including a lot of the other professional traders, because we don't have to wait for this this failure, because we can be anticipating that it may, not will, it may happen on the next bar, so we can start to be ready for it. This is what I was talking about last week, is that we're not looking to have market scanners or market analyzers working and us being in reaction mode. We're looking to try and work in advance of the market, always trying to anticipate when a particular trade setup is going to unfold, so you're ready for it. And this is the most important thing, I think, in trading, or a very important thing in trading, is that you need to be ready. I was having a conversation with one of our support guys who was talking with a customer, saying that they find it difficult to get ready for the trades. In other words, they all seem to be in reaction mode. Well, this is why here, as the market went up through it, hit our DP level, you can start to be ready. Or in this case, this is the 3-minute bar, for the next 3 minutes to see what the next bar did, to be on the chart. If you're in NinjaTrader, have your trade module ready and everything ready to go if a setup occurs. So in other words, you're working in advance of the market and being prepared. You're not just reacting to it when a market analyzer or scanner beeps at you. It's a lot better way to trade. So what do we expect from this now? Well, if I right mouse click over the red cell bar, do analysis, we're now expecting the market to move back down to the DP from the prior swing to the last high. I'll just take that pivot off there. Remember, we have the last swing into the high, so that would be the DP off there where we anticipate the market to go. So this is where we have another advantage over amateurs and also other professional traders, is that we have a target for this as well. And why is that important? Well, because we know with all trading that not all trades work out as anticipated. In other words, losses unfold. And we'll have a look at a loss in a moment. So when the losses come through, it's important to keep your losses small. In this case, this would be -1R, or one risk unit, risking 2% of a sample $20,000 account. But you see the important thing here, that if the market gets to this level, the profit will not just be large in dollars, but it'll be large in risk reward units. This is the whole key of successful trading. So if it gets down here, you make a profit of 6R, or 6 times the initial risk. If you're stopped out, you make a loss of -1R, or 1 risk unit. So that's why we have several advantages in MT Predictor over most other people out there. If I turn training mode off, you can see this is what happened. The market came down, it wobbled around a bit, it took you into trade, did actually go back into negative territory before it then started to go with you, and then came out at the target for a nice 6-hour profit. So this would be a very good trade indeed. But you see what we're looking to do? We're looking to catch what is essentially a fake out. Why do I like these? Because the professionals are going in the opposite direction to the amateurs. They tend to then move the market quite sharply in the opposite direction. That's why you tend to get quite sharp moves like this off the VS setups. Do they all work out as anticipated? Of course not, because if I look at, again on the 3-minute from this morning, if I look at the YM, here again is a VS setup with our MTP trend. If I go back to here, it does look like it failed at that previous high. If I take the DP off there, go forward 1 bar, it then came back down again. Our MTP trend was grey. It looked like it was going to go down quite nicely, but if I turn training mode off, you can see it got just past the 100% initial risk level, has now gone back again, and you would have been stopped out. So in this case, this VS setup didn't work out as anticipated, and it would have been a losing trade. This is where the position sizing comes in. So this would have been a -1R loss, or 1 risk unit loss. So that's why it's important to use position sizing. So when the losses come through, they're kept small at -1R. Now, it's a pity about this one because I like the look of this one, because if you go out to the 15-minute chart, this looked like it was coming in quite nicely off. If I place the analysis on that bar, at the time, that was a TS3 sell. And this here was coming off a DP high there as well. So this looked like it was going to carry on down. And where was it looking like it was going to carry on down to? Well, this is the last swing into that high. So it looked like it was going to carry on down into this level. So when you came back down to the 3-minute chart, it looked like it could have gone down to potentially this low down here for a potential 11R profit. Remember what we talked about last week about trying to increase your profits by going a bit further? Well, this is a good example of when not only did the trade not work out with a losing trade, but it also didn't work out with respect to the higher time frame DPs. It just didn't go down there. So this is what I said last week, is that when they do run further than the target to the higher time frame DPs, the profits are larger, but they don't always do that. And the reason they don't do that is because of the whole concept of what we're behind at MT Predictor and doing things in isolation, is that 50% of the time, or maybe slightly more, markets are random. And this is such a difficult concept to then get your head around, is that you can do some lovely analysis that looks absolutely great, and then the trade didn't work out, even with respect to the higher time frame DPs. It didn't work out because the market then went random, then started going back up again. Even when you're halfway through a trade, if I go back to the NQ, I mean, this one here came down nicely to here, but you may have thought that this might have gone a bit further as well, because if I go to the 15-minute chart, that's the last swing to the high. There's the DP off that last swing. It looked like it may have carried on down to this level. And into here, which it didn't, of course. So this is where the market started to go random. And you may have well looked at this and thought, well, actually, I've now taken 6R out on that. Perhaps I like the look of this W3 or wave 3 trade setup. Coming off a nice high, market trend was down. We hadn't reached our lower DP level. Perhaps this trade setup would have been a good one to take as well. But can you see what happened? It didn't go as anticipated. It went down, it then drifted sideways before going back up again. So this is another example of why it's so important to use position sizing and yes, anticipate the markets can go further, but also understand that markets will go random at times. And it's important that when I'm doing training is that I show you the other side of the coin. In other words, we don't just talk about marvelous winning trades. We talk about the times when the markets don't unfold as anticipated, because it's so important for you guys to understand on your side that markets will have periods when they don't work out as anticipated. And this was probably a good example of what, again, looked like to be a perfect trade setup that didn't go where you anticipated it to go. So would this have been a losing trade? Well, can anyone tell me where we anticipate a sort of minor support level of this TS3 setup? If I go back to here, just after you're in the trade, I go back to here. Can anyone tell me where you can place a DP on to get a minor support level? Come on, guys, you should all know this, yeah? Mazir's in there to start with, absolutely dead right from the wave B. So when you have an ABC correction, the wave B is an area where you'll get minor support. of course, that is exactly the same as the last swing into the high, isn't it? This is why we look at the last swing into the high and lows so often, as that's the high. This here is the last swing into the high, therefore we come off the wave B. So that'd be an area of minor support. So once this trade setup gets into the DP from the minor B, that's probably a time when you can actually perhaps bring your stop to break even. And actually it turned out that actually that was the low before it had gone up and stopped you out. You're quite lucky that if you hadn't got stopped out then and you were still short, it did have another opportunity to come down to these levels. So it gave you an opportunity to bring your stop to break even as well. But you see how using the DP from the wave B is also an area where you can perhaps bring your stop a little bit closer. I mean, you mustn't bring your stop too close too early, because as we saw on this first trade setup, you see if you just used the 100% initial risk level here, you'd have been stopped out and missed out on this 6-hour profit. So that's why I'm not saying use the 100% initial risk level. I'm saying we use the DP at a logical pivot, which is DP off the wave B. So there's a couple of points there. So are there any questions first on our VS setup, on our volume spike setup? Any questions on what we're looking at on our VS setup, where we're looking for the market to make a significant move beyond an important prior psychological high or low? This has to be quite an important high or low. You can see this one is a fairly major high here. So we're looking for a move through an important high or low that then fails to follow through on the next bar at our DP level. That's what gives the VS setup. We're then looking hopefully for that to move strongly in the opposite direction. And because of that, these tend to make strong moves. So that's why the VS is one of my favorite trade setups. We also saw that they don't always work out, as in this VS setup here. And this didn't work out. This is an important point to understand, is not all trades are profitable. Not all trades work out as anticipated. Right, are there any questions on the VS setup so far on that? And in particular, is that how we're looking for it to be a reversal of an important high or low? I mean, the PS on this YM trade is we can see here that this VS setup was a result of the failure at this high, wasn't it? So this wasn't really a significant high, was it? If I go out here, this would have been the significant high. So you might have thought in the back of your mind that this might not have been such a good VS setup because it wasn't going off an important prior high. I think the only reason you might have liked the look of this is because on the higher time frame chart, at the time, that would have been an ABC correction. So that would have looked like it could have actually then been coming in for a nice high. So that's probably a reason why you might have then liked that particular one. But as we've seen, it didn't work out as anticipated. Not all trades do, and it's important to understand that. Right, so if there aren't any more questions on that, I'd like to have a look at some other markets. Perhaps we'll go through and have a look at some Forex markets on what the market's been doing since we looked at last week, and again, have a quick look at crude oil. Right, let's come on to the Forex markets. The first one I want to look at is the Australian dollar, US dollar. This is because where we left the analysis from last week. So it's quite nice actually coming back a week later to see what the market's actually done. So if you all remember what we were looking on the daily chart. Because remember, this is how we do MT Predictor, okay? We don't look to use MT Predictor as a black box system. All you guys should know that, because all the people who are in the webinar today are fairly familiar with MT Predictor. We don't use it as a black box system where we blindly take all the signals as if it's a mechanical system. We don't do that because we know and understand that markets are random about half the time. So just over the half the time, you won't get a clear pattern to then be able to do any discernible trade analysis. In other words, the market's a random pattern. So what we do is we go out to a higher time frame chart and we place our DPs on the chart. And remember what we did before this pivot got here, we placed a DP off this previous level on the higher time frame. This is the daily chart, and we look to see if the market's going up to that level. Then on the shorter time frame, which was the 4-hourly chart, there was the market making the reversal at the higher time frame resistance, wasn't it? The initial move came down. We then had an ABC correction, albeit a very choppy ABC correction. Our MTP trend had turned red to signal the trend was down. We then had our TS1 trade setup. If I take everything off, there's our TS1 trade setup. It was actually a W3 trade setup, a wave 3 trade setup. Why was that wave 3 trade setup? Because this here was the initial swing after the initial move off the important high at the higher time frame resistance. So this was a wave 1, this was a wave 2, even though it says 2 or B was a wave 2. So therefore we're looking to trade the wave 3. That's why our target here comes out at the typical wave 3 WPT. In other words, we're anticipating this is going to be a wave 2. We know that wave 3s are typically the strongest and longest in a completed 5-wave sequence, therefore have the largest profit potential in relation to the smallest initial risk. So this is why the W3 or wave 3 trade setup is my other favorite trade setup along with the VS, because they both have the potential, not the high probability, but the potential to have moves that are large when they unfold. And here you can see the market has indeed, since we looked at this last week, has indeed gone down to the typical wave 3 WPT. This is where a nice profit of approximately 6 times the initial risk was available. So it's always nice to see this unfold, after we looked at it last week. So this is what we were anticipating, and this is what it has indeed unfolded. Let's just skip through some of these. The euro, not much going on that. The Swiss franc, again, not much going on that. British pound, not much going on that. Japanese yen, not much going on that as well either. We've looked at the Australian dollar. US dollar, Canadian dollar, not much going on that. Euro, JPY, not much on that. The Swiss franc, well, this is interesting because, again, this is the analysis we had left on from last week. So this was the 4-hourly chart. What we looked at last week was, there was the daily support, wasn't it? The daily support off the prior low. So what we said is that could be a support. I think one of you actually exactly rightly said is that that could then be a good opportunity for a long trade. As you can see, it started to go on the way up. We'd be looking to avoid this sell setup because our MTP trend is blue, and also we're coming off this higher time frame support zone. So we'll leave this analysis on and see how it unfolds. Not a lot happening on this one. The next one I'd also like to look at is this one, the Euro Canadian dollar. Why? Because this was, again, one of you guys last week did this analysis for us, in that here we were on the higher time frame chart. Remember, this is what we do. Was the last swing from the high. So there was our DP support. The last swing going up to that high. You can also take it off this pivot low here as well. It just about clips it there as well. But either way, the support was coming at that level. So what we did is then when we came down to the 4-hourly chart, I think one of you guys was saying that even though there was no setup here at this particular low here, what we had to be aware of was if the market went up, our MTP trend turned blue, therefore the large degree trend was looking to be up, we'd then be looking for, or be wary for, or ready for a potential ABC correction or potential buy setup to then to be able to look to go long. So I can't remember who said that in the webinar last week, but that's exactly what we should be looking for. And as you can see, that's exactly what's unfolded. So this is how you prepare yourself in advance. So do you see how I skipped through quite a few of the charts, not really having to do much attention to them? Because you didn't need to, because they weren't coming off higher time frame support and resistance zones. So the thing is, you only need to focus your time on the markets that appear to be in a clear position, or at a time when the market seemed to be in a clear position. In other words, the ones where the fog has cleared. So this is a great example of that, in that, we had this on the chart last week, and there we were ready for a potential rally, and then we were ready for, more importantly, a corrective swing ideally to unfold as an ABC, which is exactly what this did, to then prepare us ready for potential long trades. And as you can see, there it is. Now, is it going to turn out as anticipated? Is it going to carry on up to that level? I have absolutely no idea, and I don't think anyone in the world does. All I know is that if it comes down and stops you out, it's a -1 hour loss. If it carries on up to that level, that's the typical wave 3 WPT, because again, this is a wave 3 trade setup. The profit is approximately 4.5 times the initial risk. We can look to our hard time frame DPs. So that's the last swing into the low. So that would be an area where major resistance is. So if we come down to the 4-hourly chart, we're nowhere near that. There's the high time frame resistance. That could be a larger trade to yet again to even to aim for. So at the moment, this does look to be an area where the market could go to. But the point I'm trying to make is that we don't know. We don't know in advance where the market's going. All we can control is our losses by our initial risks, and then when we decide to then look at the trade setups, i.e. when the picture's clear. We can't control whether the market's going to now turn random, as we've seen a bit earlier in the webinar, and not unfold as anticipated. All we can do is control our initial risks. But over time, if you do that, then enough of the time the market will get to these targets that have profits that are larger than losses, and that's what we're trying to do as professional traders. And I think the last two here, not a lot going on these two either. So are there any questions on that at the moment before I go and have a quick look at crude oil? As you can see, the whole idea with MT Predictor is we do the same week in, week out, day in, day out, month in, month out, year in, year out, decade in, decade out. And that is the one thing that you need to have with trading. I see so many other systems out there that come and go that are like a fad, and they say, oh, we've got this new optimize this and optimize that, and whizzy this and whizzy that, but you don't see them still going, much later. I mean, MT Predictor now, we're in our 21st year. Myself, I've been following the market since 1987. What's that, 35 years now? Where I've been doing exactly the same thing, looking at these same patterns repeating again and again and again. And this is what amazes me, is that these patterns are still here and still work on different time frames, different combinations, again and again and again and again, year after year after year. And this is what we do, is we just try and build consistency. But the real trick is having the understanding that they don't unfold all the time, having the understanding and acceptance that markets are random half the time. This was the big thing for me in the early days, is trying to get beyond that. If I did any analysis, that would be where the market went. And, if it was wrong, well, I didn't know what on earth's happening. It's the understanding that when it doesn't go as anticipated, like we saw on the YM earlier in the webinar, it just means that the market's in a random phase. And it's literally having the patience and discipline just to wait till you get the clear setups, but then don't get panicking if they don't go as anticipated when you're in them. It really is just basically a patience and waiting game. That's what successful trading is about. It's doing nothing most of the time. And I think so many people find that hard. Most people are sort of active junkies, and they're just in for this just because they want excitement. But that's not the way to be a successful professional trader. Let's have a look at crude oil. This is an hourly chart of crude. If I just go back in time just a little bit, before the high came in, here's a move to that last low, isn't it? That's the last low there. So that's the last swing into the low. Remember, we use the last swing so often. So you right mouse click off here. There's your decision point. You see how it's there in advanced. Again, this is on an hourly chart. If I turn trading mode off, look what crude oil's done. It's gone up to that level, but you see how it made a reversal off that level. So the question I had was on this 15-minute chart. Did you see now how suddenly the pictures become clear? Because on the the 60-minute chart, there's your 60-minute DP. Do you see what happened? The market went up there. It made the reversal. It then came down. It then made the initial swing back up again. Our MTP trend was red stroke grey, so agreeing with us. So can you see how this TS1 sell was now in the direction of the large degree trend? In other words, the trend was coming off this higher time frame resistance. It was reversing at this high nicely, therefore the picture was clear. So this one would be a nice trade to take. Now here's a pop quiz for you. Did you want to then come out at that first target there? That was a TS1. Would you want to come out at the first target there just for a 2.6R profit? Or would you look at this and think, well, there's the major high. This is the first move, the initial move off. This is the ABC correction, the initial correction to the swing here. This might be a wave 2. Therefore, this might be a wave 3 swing. So maybe you want to come down here to the typical wave 3 WPT. That increases the potential profit a little bit more, up to 5R. Or perhaps you want to then go out to the higher time frame. That's the last swing into the high. Do you see the analysis I'm doing? Exactly the same on a different market, different time frames combinations. I'm doing exactly the same thing again and again and again. There's the low. Take the DP off there. Of course, the market hasn't got there yet. So now if you come back to the 15-minute chart, might you want to say, well, perhaps I might want to try and say, well, is it going to come down to this level here? I don't know whether it will. I've got no idea. But all I do know is if it does, the potential profit there is almost 24 times, there we go, is 24 times the initial risk. So you probably have your stop at break even now. So you let it run. So do you see what we're trying to do is that we're trying to wait till the market pattern becomes clear as deemed by the higher time frame support and resistance zones. We're then looking to take trades that fall in the direction of that large degree trend. Here, after the highs come in, we're then looking for the market to go down. Therefore, sell setups good to take. But you see how we're not using MT Predictor just as a black box. We're trying to use our brain a little bit. In other words, you don't just look at this and say, oh, there's a TS1 trade setup. That's the target it's told me. That's 2.6R profit. I'm just going to take that. You see how we're trying to use the tools in the software to try and then help maximize your trades. I think this is what frustrates me so much is that people come in to buy MT Predictor or subscribe. They have a quick look themselves. They think, oh, that was only a 2.6R profit. They think that's actually useless. Give it up. And they don't seem to understand what we're trying to do in that where you have the ability is, you can then look to run these trades further. And then if you do have trades like this is where you make the big money. And it's by making the big money that then actually pushes your count up large over the time. But of course, as I said earlier, we don't know whether this is going to happen because as the market goes further out in time, the market gets more random. And therefore you have the potential that markets won't unfold as anticipated and then start to go random. I mean, if you're very conservative, you may say want to put a DP off that low there and had a look at what the profit was coming into that DP and said, well, that's almost 16R profit. I'm going to be a bit timid. Perhaps I might want to take that. If you do, 16R profit is very nice indeed. But you see, the point is that it's far more than just 2.6 or just over 2.5R. So that's what I'm trying to get you guys to do. But of course, to get this, look what you had to sit through. It would have been down here at 11R profit. It would have gone all the way back up again to virtually nothing before then starting to go back down again. Like here now, it's starting to retrace back again before it may go down to the 24. This is the real hard part of trading. This is the bit that will sort the men out from the boys. It really is having the mental strength to watch an 11R or 14R profit go to virtually nothing to then start to go back with you again. Particularly with over time, sometimes they don't work out. So this is the hard thing of trading. This is the real difficult part that I think that most of you struggle with. I mean, a lot of you may well have done as it started to come down, here, and you were sitting on down here about in an 11-hour profit, you might have then used the trail above the 1 bar high. That's an option in our trade module in NinjaTrader. So if you had have done and you'd come out here at just over 11-hour profit, that would have been really acceptable as well. That's perfectly acceptable to take an 11-hour profit, because again, that's so much larger than just the 2.6-hour profit initially. So that's what I'm trying to get you guys to do, is not just take the trades as they're stamped on the software, but have a think about what the large degree picture is and trying to let these trades run a bit further. And if you can gain some big R profits like this, then that is what will really move your account forward. And I'm hoping that some of you guys will do that, because once you start to bank a few of these large profits, it will make your trading so much easier, because you can now have 2 or 3 losing trades and it doesn't matter at all, really. So hopefully that's where this training will help you guys to turn you from good traders into great traders by being able to, capture these large profits. So hopefully that's been a good example by having a look at crude oil. So thank you to the customer, I think it was Jules there. So thank you very much for that, who suggested I have a look at crude, because that's a very good example there of not only how to use the higher time frame DPs to prepare in advance, to then be able to gauge the large degree trend direction, to then know what trades to take, i.e. the direction to take the trades in, but also has given me an opportunity to be able to look at how to then try and extend your profitable trades by looking to let them run a bit further by the use of the higher time frame DPs. But also on the flip side, notice that not all of these trades work out as anticipated. It's because, that's the nature of that game. That's what makes trading psychologically hard to do. Right, so that's covered all the things that I wanted to look at in today's webinar. So are there any questions from today's webinar, or are we all happy on what we talked about and you just want to get off and get back to the markets and start to put all of this in practice? So I hope you've enjoyed the webinar. In particular, I hope you've enjoyed looking at the VS setup. In particular, understanding what the VS trade setup is and understanding that it's a reversal or a fake out on a reversal beyond a breakout to beyond significant highs or lows on a high volume. So again, that's what we're looking for, a wide range bar that goes beyond an important psychological high or low that then reverses or fails to follow through at our DP level. We're then looking for a trade in the opposite direction to the opposing DP that is then backed by the professionals, because it's the amateurs looking to go long here. The professionals are then faking them out to then reverse to short. As the market starts to go down, the amateurs are going to panicking, therefore they want to liquidate their losing long positions. That then helps to push the market down in the professionals' direction to then go to the opposing DP, where hopefully we have a fast move into a reasonably good sized profit. So that's the whole ethos behind the VS, or volume spike trade setup, which again is one of my favorite trade setups. Right, so there's no questions coming in, so that's really good. I didn't think there would be many questions, because all you guys who are in the webinar are experienced MT Predictor users. But hopefully you've enjoyed the webinar today and enjoyed having a look at some other markets and timeframes, and enjoyed a review of the VS and the W3 trade setup, and have a look at trying to extend your targets a bit as well. So hopefully it's been a good webinar. So if there aren't any more questions, I'd just like to say have a good trading week, everybody. I've enjoyed it from this angle. So have a good trading week, and we'll be back again to do it all again next week. So have a good trading week, everybody, and bye for now.